Good morning, Trade Pros. Give me one moment on YouTube. I think we're rocking here nice and early, but I think I lost the webinar. Vicky, are you in there? You're not in it? Oh no, YouTube. I accidentally jumped out of the webinar, I think. I gave up on everybody. Hope you guys are having a great Friday. How is it? Can you guys tell me if the video is mad choppy on your end? Like, are you seeing a lot of... Oh, wait, I didn't exit the webinar. It's just hiding right here. Here we go. All right, guys. Just give me a second. It's a Friday. And my computer is moving really slow. I'm probably going to do a quick little reset right after. All right, here we go. Hit record. Welcome to our morning market update for this beautiful February 28th. I hope you guys have had a great evening. I also hope you guys have stayed on the short side. Okay, we've been short and staying short for the whole week, and our room is doing fantastic because we're not trying to buy this darn thing. All right. First and foremost, before we get started today, we want to celebrate a huge accomplishment. We've hit 29,000 subscribers on YouTube. Thank you, guys. Thank you. Really appreciate you out there on YouTube. Our community on YouTube is very important. Our first video posted on YouTube was November of 2012. So we've been at this for a long time. 29,000 subscribers is big for me, and I appreciate it for you for being part of our community. All right. So what do we need to know about the stock market today? We're in full risk off mode. Everybody is selling right now, and they're selling to take profit. Some of them are getting their stop losses hit because they've been long for a long time. All right, we flushed a lot of sell stops to take out the long positions, and now we're getting shorts as well. We've been getting shorts all the way down, but it's mostly a capitulation of the upside as they go into risk off mode and go into safety of cash. All right, because there's uncertainty and worry, that uncertainty and worry translates into downside or lower prices for equities. The valuations were already stretched. We knew that. The United States markets were way above the highs of any other global market. All right, some global markets didn't even exceed their 08 highs or 07 highs before the market crashed. All right, and so we're just getting a correction to the downside. The market price is correcting. It's not a bear market yet, but we're 5% away. We're down 15% in a little over a week, which is a significant drop. All right. And to new traders, congratulations. No matter what has happened here, you've experienced a real sell-off with fierce velocity. This is what markets used to be like when they sold off. It wasn't like down 7 points and then up 60 points with no rotations at all. This was more like a traditional market when it would sell off. And so you got a chance to experience something special here. And so it was an opportunity for the day traders. For the longer term portfolios, I understand how it could have been a bit of a challenge. This has been the worst start to sell off. Get this, since the it's actually worse than the 1933 depression that ended up happening as a result of the market. But in 1928, when it began selling off, this is actually a faster and steeper drop than back then. So it's getting people to notice this, obviously. All right. However, we think we have something different at the disposal in today's market than ever before. The Fed. I think the Fed is going to do something. Yesterday, Christine Lagarde from the European Central Bank says the coronavirus is not yet a global pandemic. It doesn't warrant shifting monetary policy. So basically, she's saying, no, I'm not going to give you any free money yet. But, we are looking at this, and at some point we will. If you read between the sentences, that's what she's saying. So relax. It's just 15%. This is normal in the course of the markets. We ain't doing nothing. Right? But I think at some point, okay, there's going to be central bank intervention. Jerome Powell will cut the interest rate. Jerome Powell will start buying bonds. They'll launch QE4. It's coming. Here's the question, though. Will QE4 work this time? Okay? Think about this. Why the hell wouldn't somebody want free money? Why wouldn't you want free money? Victoria says, give it to me. Why wouldn't you want free money, guys, on YouTube and in Zoom? Think about this. This is very interesting. All right? You would want the free money, trick question, obviously, but if you don't use that free money to buy new products, if you don't take that free money to take risk, that stimulus is useless. In fact, that stimulus that circulates around the economy will allow people to pay down their credit obligations. And by doing that, that becomes disinflation or deflationary pressure. And so all the money in the world, the Fed could literally print $700 trillion and throw it in the market all at once, and it might not budge. If the market says, screw this, we've had a lot of risk, now I'm going to take some risk off the table. Let me pay down my balance sheet. Let me pay down some of my debt. I've issued a lot of bonds to generate cash at near record low interest rates. Let me pay down some of that debt with this money rather than do anything else. All right. And if people decide to pay down debt instead, you get something that happens that it's called a balance sheet recession. I'm just looking for the book. It's here somewhere. We just had our whole place organized. I see it, but I ain't gonna run get it. Okay, check out balance sheet recession. Read that. It's very interesting because in 2008 it didn't happen in the U.S., but in the early 90s it did happen in Japan. All right, people went to frugal mode and said, "I'm paying off my debt rather than spending more." All the money in the world will not help boost an economy where people don't want to spend money. All right, remember that. So yes, the Fed could have its back, but I think this is an opportunity. I don't know how much the market's going to drop from here. We're at 15%. All right, we go 20, we go 30, we go 50, we go 60%. We'll know when it happens. But I do think this is the start of a bit of a longer term pullback to the downside, and we could enter a bear market as early as next week. Okay. Here's the interesting part about all this, though. I think that this is an opportunity for the market to wean off of the Fed. All right, to stop relying on the Federal Reserve to backstop and support this market. Is it going to happen? Absolutely not. I think what's going to happen instead is more stimulus, more stuff, and we kick the can down the road. All right, but this is interesting because I've always said in the markets that there's a whole bunch of dynamite in a room already. There's just not an ignition source. That ignition source is a coronavirus fear. Where it's not selling off just because of the coronavirus. There's a lot of other things behind the scenes. The coronavirus set it off. All right, there you have it. Market's down 15%. The Fed was expected to cut interest rates March 18th by 1 basis point or 25 basis points, one cut. It was only 54% yesterday. Today, it's already 73% expectation. At this point, I think the Fed's going to cut March 18th interest rate, and it might have some short-term support. For the long term, though, things like this could happen. Also, one last thing I want to mention, because I know we said we would keep it shorter, but instead I made it longer. So I haven't gotten to the notes yet, but the notes are short. So here's the situation with this thing. Hang on, let me read this comment. Mark said it's going to move extra since I'm out of the office. Mark, go snowboarding. Why are you on here? I'm going to kick you out of YouTube in the room. What's wrong with you? It's your day off, bro. Mark is here chiming in. Mark from TRADEPRO. He's not in the office today. Hey, yeah. Giselle, can you check? Yeah. We blew a fuse. I forgot what I was going to say. Vicky, where was I going with this, Brent? Okay, we're talking about the rate cuts, I believe, from the Federal Reserve. And so, I lost my train of thought. When I looked over at the comments, things went sour. Thanks, Freedom Grind. Appreciate it. Love to see you on board. Donald Trump will probably be getting shot out of cannons at some point soon, right? Vicky said he tweeted if a president lets the market drop by 1,000 points a Dow, he should be shot out of a cannon. All right, and that'd be a great campaign. Be a good campaign strategy. Where I was going with this is I forgot a point. It was a really good point. I'll share with you on Monday. Okay, I'll write things down from now on. Funny enough, that's why I have this. All right, you guys, I love you so much. Be careful out there. I will send out a message to the people who are, long in their long-term portfolio and taking a bit of a loss. This is the dynamic of the market. It goes up taking the stairs, and it drops down taking the escalator. Not the escalator, the elevator. And so if you've learned anything here, if you have a longer-term portfolio that might be suffering some damage, day trading is the way to go because you don't have to be right for longer than 30 minutes. However long your trade is, 5 minutes, 10 minutes. So, incorporate this into your investing a little bit more, be a little bit more active, and you're able to hedge some of this downside risk as well. I personally think today we're going to take out the overnight low at 28.79 and we're going to rip back up. I think we're going to get a little bit of a strong rip into the close, and I'm pretty sure the PPT is booting up their computer underneath these 28.79s. All right, Google it, plunge protection team. You're gonna be fascinated this even exists. That's all I got. We got to go. Markets are down across the board. Japan's down 3.7, Hong Kong down 2.4, China down 3.7%, India down 3.6, hammered in Asia. Europe down 3%, Paris down 2.8%, Frankfurt down 3.6%, hammered in Europe. US down 1%, S&P down 1% so far, NASDAQ down 1%, getting hammered in the US as well to start the session. I think we start a little bit of downside, but be careful this afternoon. I think there's going to be a rip. Some buy stops getting taken out into the weekend. Crude oil down 3.5%. All right, it traded in the 45 range on crude oil. I think actually 46, 43. That's a misprint because right now, oh, hang on. Let me hit end. Nope. Damn it. We are 45.17. Holy crap. Overnight low is 44.95. Crude oil is just as weak. Gold is down 1% also. Bitcoin's down 2.4. All right, this morning we had some wholesale data that wasn't good. 9:15, we have Fed's Bullard. 9:45, Chicago PMI. 10 a.m. consumer sentiment. We have some numbers at the top of the hour here as well. All right, be careful. Manage your risk, trade at TRADEPRO. Hope you enjoyed that. I just wanted to give you an alternative view of what's being printed on the media. All right, be self-aware. Read these markets in real time and do something about it. And if you're having a hard time doing that on your own, join us. We got a great community. We trade every day, every morning. Love you all. Be safe. Have a great weekend. And let's wrap it up. It's the last day of the month for trading. And I'm looking forward to our team cleaning it up. All right, let's do this. Goodbye, YouTube. I love you. Peace out. Boxy, I hit a stream of consciousness there, and I took away from your